Hello everyone, this is Darko 2012. We'll be reading a Reuters article um, published on December 21st, 2009, titled Banks with Political Ties Got Bailouts, Study Shows. And you don't really need them to waste money in a study to tell you that the banks that got bailouts were that were tied to the Federal Reserve or Goldman Sachs or whatnot. So let's go ahead and read what they have to say. U.S. banks that spent more money on lobbying were more likely to get government bailout money, according to a study released on Monday. Banks whose executives served on Federal Reserve boards were more likely to receive government bailout funds from the Troubled Asset Relief Program, or TARP, according to a study from Rand Duchin and Denis Sosyura, professors at University of Michigan's Roth School of Business. Banks with headquarters in the district of a U.S. House of Representatives member who serves on a committee or subcommittee relating to TARP also received more funds. Political influence was most helpful for poorly performing banks, the study found. Political connections play an important role in the firm's access to capital, Sosyura, a University of Michigan assistant professor of finance, said in a statement. Banks with an executive who sat on the board of a Federal Reserve bank were 31% more likely to get bailouts through TARP's capital purchase program, the study showed. Banks with ties to a finance committee member were 26% more likely to get a capital purchase program funds. As of late September, nearly 700 financial institutions had received bailouts of $205 billion under the capital purchase program, the study said. The banking industry has long been criticized for using political influence to obtain bailouts. Scott Talbot, a senior vice president with the industry lobbying group, the Financial Services Roundtable, said the study was skewed because it did not exclude 9 of the largest banks that were strongly asked by the government to take bailouts. Those banks include Goldman Sachs, J.P. Morgan, Chase, Morgan Stanley, all of which repaid their bailouts in June. Bank of America Company and Citigroup Incorporated more recently announced plans to pay back taxpayers. Talbot also noted that $116 billion has also been repaid with interest. This demonstrates the banks were excellent stewards of the taxpayers' money, Talbot says. I can't believe he said that with a straight face. He probably did, I don't really know. But a watchdog for the government's bailout, the Special Inspector General for TARP, said last month that the broader $700 billion bailout program almost certainly will result in an overall loss for taxpayers. President Obama said in October that despite the bailout, there was still too little credit flowing to small businesses. And this will most certainly be this will be a story that in time, and especially now you're already seeing it, that nobody will ever really know the truth of what caused this economic crisis. There's many theories, and but I'm just going to throw in, my perspective, because I do believe in global government, that it exists, that it's here, and that it's growing. I'm not for the Federal Reserve. I'm not for the income tax. So my take on this is, going into this, I wasn't too savvy or knowledgeable on the entire economic system, and I'm still not, because it's very complicated. But I do know that it's become more and more complicated through the years, which makes it harder for the average person to keep up with it. And they know this, and they do exploit that. So, just I'm not an expert in anything. So, as far as economics go, but what I do know is that this was not a bailout. It was a scam out for the banks. My belief is that the biggest reason for the housing bubble was the banks themselves, and the whole system of how they hooked up all the loans and how they packaged them and sold them, and they knew they were bad. And yeah, there was greed involved, but there was also the same strategy that is signature of the New World Order, which is the problem, reaction, solution, and this issue applied to that strategy, because this is exactly what we got. We got problem, reaction, solution. The bankers created the problem. They used the media to scare everybody and threaten martial law if they didn't pass it, said that the stock market was going to crash. They basically did what they did with the housing market, the housing bubble, before, and told consumers to go ahead and buy houses, and the market was great, and was building confidence. And then here they do the exact opposite, where in the problem, reaction, and solution stage of reaction, the middle stage, they have to manipulate people's reaction by just totally throwing disinfo rounds down the range. And one of them was smashing consumer confidence by telling them how bad everything was and it wasn't going to get better, and basically that the sky was going to fall unless we bail out banks, right? So the banks helped create this problem with derivatives and whatnot, a big topic that hasn't really been discussed too much in the mainstream media. But just moving on to the third and final strategy stage, which is the solution. The solution was to, of course, give money to the banks so that they could increase lending, and or to turn on lending again, right? To build up their capital at the expense of the taxpayers. There we go. And just recently, the past month, they've said that these banks have paid them back. But the whole $700 million bailout, the actual number is just a number that they picked out of thin air. There was really no reasoning behind it. It was just a large number because part of the program was that it was just allowing them to tap into like funds. There was, as far as an amount, a limited amount, there was no limited amount. They just want to make it seem like they were, that there was some kind of ceiling to the amount of lending that was going on. And as far as special interests go, it's just a complete joke, people. Come on. All you got to do is go look it up yourself. The person who was the Treasury, the Secretary of the Treasury at the time, it was Hank Paulson. The guy worked for Goldman Sachs. And who was in charge of the bailout program, right? It was Kashkari, the man, who just showed up out of nowhere and left out of nowhere. As fast as he came, it was as fast as he left. And he's one of those people that will just go down in history as, they won't be in history, right? Or they'll be hailed as heroes like Ben Bernanke and put in as called Person of the Year by Time Magazine, right? And he also Kashkari also was worked for Goldman Sachs. So my belief is that it was just a big takeover. They have already slowly taken over since 1913 is when they instituted the Federal Reserve System. And this is just a kind of like since then, kind of like a two-prong, three-prong attack. And it is economic warfare, and it's not a recovery, people. Anyone that is out there that believes there's going to be recovery, there may be, they may start lending a little bit, but we're not going to be the way we were as far as the United States goes. Our economy is not going to be the way it was ever again until we get the Federal Reserve System out of our country, out of our government, out of our economic system, and we start backing our currency with something. So, and if you go and you read other articles about recent articles about how they were paying back, the banks were paying the government back what they got, you'll see that it actually says that the government's telling them to don't lend money back. So yes, they gave the money back, or they paid whatever amount back to the government, but they're not lending. They're being told not to lend. They want to lend, and they're being told by the government to not lend. So it's like a big game that's being played right now, where it's just like, well, I don't know what to do. I don't know what to do, and nobody's getting any kind of loans or anything. And what do? They just take their money and they consolidate power. They buy out other banks. That's what they do with it. So that's my say. Peace.